Hello, hello, hello. Good morning. Welcome to another ES Futures trading stream. Today is Friday, January 5th. It is the last day of the first week of 2024. We have the market, or we are going to have non-farms, the first non-farm payrolls number in just, less than 25 minutes. And the market is in this situation. Now, I'm going to bring my bigger time frame charts here. All right. We have here yeah. Okay, this is the market. How many times have you seen this kind of charts? When the market reaches an all-time high and breaks from that high, and give us a double top. Double top. If market can come back all the way down to here and then another one. Then we have another rally. How many times have you seen that in your daily or intraday charts? This is for context. This is the one on the left is the monthly time frame, the one on the center the weekly time frame, and the one on the right, the daily time frame. Now we can see the monthly, for example, is trending higher. We have 3 months in a row. Now this month has just started, right? This month has just started. We have trend. We don't know if the market is going to come back. As long as this low is staying, this is still going to be a trending market to the upside in the bigger time frame. The bigger time frame, the monthly, is always the last one that reflects change. The weekly, we got the weekly. This is the all-time high. The weekly has formed a three-week range here. Where this week or where today is going to close is something that I am watching here. I wonder it's very interesting to see where this week is going. Is this week going to close inside this 2 days range and form a 3-week range, or is going to have downside extension and close to this low here? It seems far here, but actually it's unbelievable how quick the market can get to this low. Remember the last week, the last 2 months, these 2 months here, the structure of the market, the way how this market was going higher was ridiculous, right? The structure is super weak here, and that can be seen when we check the daily time frame. When we check the daily time frame, here, we see here, for example, how many gaps this market has, right? This is the first time I've seen so many gaps in this market. It's just unbelievable what's happened here. You got 1, 2, 3, 4, 5, 6, 7 gaps. The 8th gap, there were multiple times the market attempted an 8th gap during this the last 2 weeks of last year, and every single time that gap was closed. Every single time. You can also you can bet the house here. You could have bet the house here. The market was going to close that gap every single time, and now Now we have a range. We had a range until yesterday. It was a 12 or 13 days range here. Let me show you. Okay. We had this range yesterday, up to yesterday. Okay, and yesterday the market has looked below this range. You know, good. We were talking about how good the odds were for this market to take this low out, because it had three lows, multiple lows there. The odds were high the market was going to take that low out. But boy, it was extremely, very hard. It was a very hard, very difficult day to trade, at least for me. I have decided, you know, you can see there was change in the weekly time frame. There was a trend now in the daily. You know, you can clearly see 1, 2, 3 days going lower until yesterday. I said, my mind was I'm going to say rallies, but boy, it was hard. It was really hard. As a matter of fact, I couldn't. You know, I tried to get in the market multiple times, but I was being constantly stopped out. And at that moment, at one moment in time, I said, I mean, this market, I just noticed that this market didn't have the conviction on the direction, and on any direction actually. And I decided just to leave the market alone. But the thing that happened here yesterday, let me open something else here to show. I hope I can show this. Let me open another chart here. I'm going to use a comparator because this is fundamental for my trading. I have noticed, for example, yesterday. Okay. Oh, and to have context as well. Okay. I always keep an eye also on these markets, because the market is always looking for something. The market doesn't have any shiny thing. It's not watching on any of these markets now. But there are times that the market will be focused on crude, on bonds, on dollar. The dollar is weak, which is actually good for small caps, for big companies. I mean, crude oil is getting lower. Crude keeps going lower. That wouldn't be such a good sign actually for the market, for the economy, and the market as well. But remember also, you know, this year 2024 we have elections this year, and there is some interest. There are some interests there as well. Gold. I don't think the gold is going to move a movement like this, for example, anytime soon. You know, towards new highs. I doubt that. I think it can move higher, but I don't know the time frame. I have noticed also how this bond market is rally, but this looks like short cover. But it's far. You know, I start paying attention to these markets when they are at extremes, right? When they are either up high here or way down here, for example, right? When the market keeps going lower here. Or when the bond market comes down to here, or may take this level out, for example, right? There's nothing going on here. Now, yesterday, this is what I'm talking about. I'm going to stick data here for this chart. I want to show the trade. There were two opportunities yesterday, right? The first, to understand the market, no, the market opened with a gap yesterday. The market opened with a gap. Opened below this low. There was a gap, but the gap was closed right away. That was a sign that something has changed, right? I had this short bias. I have made up my yearly, or before actually to sell rallies, and but when the market closed this gap really fast, boy, I started to doubt this. Well, okay, let's give this market time. And this is what I have here. When this period opens, the market opens, it just rally but dries here. Okay, I attempt something here. Fail. The next period also dries here. I attempt another short here. Fail as well. Okay, so that's why I better leave this market alone. Because this can have. It was looking all the way up to here. It was looking as a trend day actually. I have started to think this can actually be a trend day coming from the overnight. We have a very prominent POC as well, and the odds were also. I have some odds towards or thinking that this market can, this kind of POCs tend to attract the market back and forth, which it did actually. It did a lot of back and forth. Here there was a lot of sideways trading around this POC, this overnight POC. It didn't have the volume, but still, traders. It's a sign that who is in the market. And when I saw volume, the market has really low volume. Okay, anything can happen. I just decided to do. But, the first opportunity happened when, after I saw this volume drying here. So up to here, the market just suddenly have this formation, okay? Not dry anymore. Potential to keep going higher. But up to this moment, just notice what happened here. This volume from yesterday, from the previous day, was clear. I guess I can take a screenshot can explain better here. This volume was removed. Okay, there's something going on here. Okay, what kind of traders are here in this market? To keep going higher towards this area here, more volume here. This market needs to have volume. Okay, so this is not short covering anymore. The market actually needs to have volume towards the upside. It was starting to have something here, but fail. Not fail at this moment, but it just lacks. Ends. The action is not complete. There's no taper here. Okay, here as well, no taper. Doesn't have this formation here. Okay, so this was it. You have something here. Okay, whenever the market does this for this day, which was Thursday. Okay, remember, no 2 days are the same. Okay, I got something here. This is interesting. This can be an opportunity to short the market. But boy, this was really hard. It was really hard. And then the same formation, the same pattern that the market was having to the upside. It was having to the downside. Dries, but keeps going lower. Okay? Dries, but keeps going lower. And then a lot of sideways trading. It was really hard. This was the first opportunity. The second opportunity, believe it or not, came when the market reached the daily low. Okay, and here is when the homework becomes really important here. The market made this low. Remember, it dry here, meaning that there is nothing to the upside. This is when down here, when it becomes relevant. Here at this moment in time. Okay, and a fail here as well. Okay, failed here. It failed. It just failed. It just didn't happen. That was the lack of conviction here. Okay, until this moment in time, in the last period. But there is a lot of homework you have to do here. Up to this point, market was breaking, and what the market was doing, the Nasdaq, first thing, the Nasdaq was selling from halfback here, and in this period, the market has the chance. Okay, the market POC wasn't going to go anywhere in Nasdaq. It just needed value. But coming down to here, the Nasdaq has the opportunity to trade towards this low, to the daily low, which the ES has already done. That was something they already Nasdaq. And there was a perfect scene there. Okay, this was a sign here. When this happened, and it happened in such a nice way, really steady selling, nothing desperate, no spikes, no nothing, no nothing here. And the homework from the morning or the previous day, or whenever you do the homework, was really important at that moment in time, because we had these three laws. The context we have this is a go no go level. It was a go no go level at the time, right? When we did the homework, when we talk about that in the morning, this level was important. Remember? Do you remember that? Check the last stream, and you will see that. And it was a low risk. It was a low risk test. The trade was just taking this low, setting your stop a couple ticks above this low, and that was it. Maybe a couple points, and not much. And rotational days, don't expect having too much. I notice how these dries also. There is nice spike here, a second spike, back-to-back spikes to the downside, and now the market again is open with a gap. We have a spike from yesterday, we have a gap as well. Same thing as the day before. At one moment in time yesterday, I was thinking, no, this market doesn't have any conviction on any direction. I was thinking this spike was being rejected because most of the trade happened above the spike, but as the session was closing, coming to an end, value just moved lower. Value went from lower to overlapping, then to overlapping to lower. POC moved lower all day long, close at the base of the spike, and I notice how value is. We have the same value above the spike, same value below the spike. And that's right there. The market is not accepting, is not rejecting this spike. Yeah, this is very hard. For me, it was very hard. I actually closed the day with a loss yesterday, with a small loss yesterday. And now we have just a couple minutes, like 6 minutes before non-farm payrolls. Look at what we have above. A lot of inventory here. Weak inventory, non-excess, mechanical high as well, non-excess, mechanical high here. Why is a mechanical? Look, it's very close to this low. Right? So, but the market has, the way how this market was selling, for me, it's a reaction to last year. Traders were, the last 2 weeks, the last 2 months of last year were just so used to buy. Now, it is hard to change that mindset. It is hard to break habits. Traders keep buying here. Keep buying. I'm going to, try to catch a knife here. The market is going to come back eventually all the way out to here. But when that's going to happen, I don't know. It can happen today. But this inventory is really bad. It's really, really weak. It just tells me, when I talk about this, what kind of inventory we have, it just tells me who is doing the trade, what kind of market we have. And for what I see here, I don't see any change from last year. In the last year, we have one market, one type of market, one type of trading, one type of traders. The dominant forces on the market of trades were one type. Basically short-term trading money, not big investment. Really committed money here. At least that's what my humble opinion. Okay. Now, notice what we had. The way how the market traded yesterday was grueling. It was really painful to watch this thing happen, this thing develop. The market gave us a spike. This is an exit for this trade, long. So now, if you are somebody short here, really have a high risk now, because the market, it is true the market come down in one shot all the way down to here, because there's nothing. Notice what do we have here? Nothing. We don't have nothing supporting, nothing holding this market. There's a lot of trade around or above this distribution. The market just is testing this distribution from last FMC. Curiously, just the same date with another FMC, which is news, right? News. The selling is weak. There's no really convincing selling here, but the buying that happened here also was weak, right? So I actually have no bias here. This market come after the number. This market can come all the way up to here in 2 seconds, or it can come down all the way down to here in 2 seconds as well. So I am flat in front of the news release. I have no intentions to place any trade, to trade that kind of environment. If any, I can see, for example, we got good amount of trade below settle, a good amount of trade above settle. Now, if I expand my overnight, I can see inventory is actually short here. Notice where this high is, for example, right? They are selling this. But how many times the market was sold from this level? I don't care what level it is, but this how many times was sold from here. Mechanical high, mechanical high, mechanical high. This inventory is really at high risk of being, forced to cover. Big traders know that. Big traders of capital that can move markets can come here and just place or do something just to take this inventory out. And that's it. That's the trade. If the market gains momentum after that, that's another question, right? If that's enough for traders to start buying, that's another thing. For what I see, value keeps moving lower. No intentions to do anything. All right. Less than a minute to the number. I'm going to be really here to watch what happens. Today, you have the opportunity as well. Jim has a webinar at 9 a.m. It's a free webinar. If you have a chance, I strongly suggest you to be there. Listening to somebody like him cannot hurt. Can only help. Can be really helpful. All right. But place your bets, people. All right. We have a break here. I'm going to expand this. As a matter of fact, I'm going to add something here today. I'm going to put today there. I'm going to hide this. Okay, so we have the profile here. So we have a spike to the downside here. What the number is, I don't know. It looks like a, what is this? For this reaction, maybe be inside expectations. Maybe positive number. Remember this high. Now hardback has moved, right? Now hardback is down here, and this is not hardback anymore. But remember where it was, right? The 47 said, these round numbers as well. These round numbers tend to attract the market. Traders get focused. Traders will take profits, will buy here, will sell here. This is it. You know, this magic. There is some kind of magic in this in these numbers here, in this round, in this century numbers. I won't be surprised if there is some buying starts here. Now look at this. What? There was a lot of volume at this level. So wow, just 100, 1 point above 47. $18,000. Now, yesterday we have really low, not low, but lower volume than the previous day. Okay. This is also a sign that the market lacked conviction yesterday. Look at this accumulation here. Around this area, right? Around the center of this. There's big blocks here. There's some big blocks there. This could be profit taking. I don't think this is adding here. What level is this? 9 around this level, right? The distribution. This is what closes the distribution. Which distribution? This one. You know, when the market closes a distribution, the potential destination is the opposite side of that distribution. As simple as that. You know, those are some guidelines only. There are not holy grail, or grail, I don't know how to say. Grail? Holy grail? Look at that. Oh, if you are interested, something that I haven't mentioned before is that way up here, around this area between the 40, the 23 and the 17, I would mark that on my charts, this area here. There were huge amount of blocks here, you know, trades or transactions in the 10 of thousands here at this level, happening at the closing or after the closing, after the market close. This just astronomical high here. There were big bets, or either these were big bets here, or big profits taking here. You know, or huge stakes, you know, just taking profits out here. Probably when it could be both the scenario, both cases can be very well argued, right? If somebody has a position way down here, you know, it is time. It is time, end of the year, you know, it's a new year, no more here. So I have a good run and that's it. Profits. Also, okay, this is too much. This is too much. I have really low risk here. If the market comes all the way up to here, that is short distance coming down to here. Low risk, and the potential is actually high to the downside. You know? Both have we never know what is. You know, I have, for example, I have 1,168 contracts here. What are those? Are buys? Are sales? Are trades being closed? Trades being open? Shorts being forced to cover? Or loans being liquidated? What it is? We don't know that. I don't know that. I just know there's a big volume. That's the thing. That's all I need to know. And that's market generated information here. If I use charts, if I'm going to use charts like in here, for example, let me open this thing, right? Because this is a way how traders, the way how most traders trade. Traders use this kind of charts. Most traders use this kind of charts. Candlestick chart, this is a bar chart. Right? Okay, if the market takes this low I am going to short the market, or I am going to buy here because this is support. Buy here. This is going to go higher because it has been bought multiple times. Has failed here, has failed against. This is higher lows. There's no other way to the upside. And this is price. This is called price action. Oh, the market is going lower, lower highs. There is a breakout here, so I have also a continuation. This is, call it whatever you want. But this is what we do here. We look just to one thing. We look just price. Now, if I incorporate volume here, it adds another dimension, right? I can see for example, all right. What's happening here? Let's see what happened. What's happening in this volume here, this bar, for example. This bar is higher than the other. What happened here? Okay, the market tried to go lower, but it was rejected. It closed it inside this one, right? And then the market dries here, keeps going higher and it dries. Okay, let's have what's happened with this bar here. I think it's that one, right? I think it's this one. There's a breakout, not a breakout, a potential upside continuation because this was a breakout, but fails. And then you got higher bars, big bars, and higher volume here. There's something going on here, right? But what else, right? And now market profiles incorporate. There is another dimension here. When we use market profile, we have price and time. Price, volume here, volume, and time. How much time the market spends around certain areas. That's a three-dimensional. That's a three-dimensional way to see the market. You got, so it's the information, and this business is also about the information. The amount of information that we can have from these charts. There is just a lot. There's just a lot of information here. Way more. It's unbelievable. People don't believe. It's hard to believe. How can I have more information on that chart than from these charts, for example, right? I can have Bollinger Bands, Fibonacci's here, 50 moving averages, 20 moving averages, 40, 400, whatever. There's a lot of indicators here. There's a lot of information here. How can I have more information from charts like this one than charts like this one? This is just unbelievable, right? It's really simple. There's no more things here. I don't have anything here. I don't have indicators. And have these levels not to trade from these levels, but to observe the market. What the market does, what these can mean, for example. To me, I have one thing on mind all the way almost to the closing, right? Because this opportunity also, I was thinking that down to here, the market may have another rotation here. But what happened with L actually, with this rally, when the market came all the way down to here and did not came up to here, what happened with this was the market actually moved POC lower, right? Move POC lower. And M, you have another period here, M coming all the way to here without taking L here. And this is two pieces of information together, right? L was key here, but L coming all the way up to here, to where it came, just make sure that POC was impossible to move higher. It doesn't matter what happened. What happened afterwards, POC was not going to move higher. Coming out down to here, POC cannot move lower as well. Neither higher. POC was going to stay there, right at the No, it wasn't the same. This was I here was held back at the time. We have downside extension here, which move held back also, right to POC. Pay attention to those kind of action as well. That POC, when the held moves towards POC, that's really, really, it's not coincidence. Now notice what's happening here. Now we have a big accumulation here, big blocks here, and volume dries here. What they're going to do? That is not a sign. This is not a trigger. This is not something that's going to trigger some. If any, maybe it was daily. Maybe I would be thinking along here, for example, right? But the market now has a spike to the downside, a gap to the downside, and another overnight spike to the downside. All signs, all negative signs. Okay, the only positive sign could be here. Maybe the only, this level, the 4,700. It's not a positive, but it's a level where traders have the tendency to take profits. Right? If the market takes this level out, there's probably more traders going. The same traders that got out here will get in here, and the stop is going to be around this area here as well. All right. I'm going to be paying attention now to what the market does or opens relative to this overnight spike. If the market opens above this spike, is rejection of these lower prices, but we have a downside spike from yesterday and also a gap from yesterday. All negative signs here. All in the market. This is information the market is giving me. All negative. Okay, I'm going to be paying special attention also to the volume. And notice, remember, there's very short inventory from the overnight and also short inventory from the day previous. All the shorts from this day were removed. Basically, we have this thing this day still in. Actually, they were removed as well. This rally removed this inventory. Okay. I hope I can come back before the opening. If not, the maybe I'm going to be doing something here. This is requires the focus that you have here. You have to be hyper focused here. This is not a high risk. It is different to have. This is Alex Hono from Free Solo. What he defines, when people says you do something that has too much risk, man. He says what I actually believe is, I do something that has high consequences. When I do free solos, I actually feel pretty confident. I'm not taking risks here. My risk is actually really low. That's his point of view. All right. It's that documentary was very inspirational. All right. I hope you guys you have a really good trading day. Stay safe. I wish you a really good trading day. See you.